Question 1. Policy provisions and coverage. What is the most likely impact on a disability insurance policyholder's benefits if they do not return the required medical documents within the allotted time frame and after an initial claim submission? A. The policyholder's claim will be automatically approved once the documents are received. B. The claim will be denied due to lack of supporting documentation. C. The claim will be delayed, but the benefits will be provided once the documents are submitted. D. The insurance provider will issue grace period extension and waive all penalties. Answer. B. The claim will be denied due to lack of supporting documentation. Explanation. In disability insurance, the claims process requires timely submission of supporting medical documents. Failure to submit the required documents within the time frame outlined by the policy can result in a claim being denied. Insurers typically require this documentation to assess the severity of the disability and determine eligibility for benefits. In South Carolina, as per state regulations and common industry practices, timely submission of complete documents is crucial. If the documents are not submitted on time, the insurer is likely to reject the claim due to insufficient evidence to support the disability. This policy helps maintain a clear, transparent process for claims adjudication. The delay or denial often causes complications for policyholders as benefits cannot be issued without the necessary proof of disability. Question 2. Eligibility requirements for disability insurance. Which of the following is a key factor when determining whether a policyholder is eligible for long-term disability insurance benefits? A. The policyholder must have a history of employment within the last 6 months prior to filing a claim. B. The policyholder's disability must prevent them from performing their occupation for the duration of the elimination period. C. The policyholder must have paid for disability insurance premiums for at least 2 years. D. The policyholder must demonstrate permanent disability lasting longer than 30 days. Answer. B. The policyholder's disability must prevent them from performing their occupation for the duration of the elimination period. Explanation. Eligibility for long-term disability insurance benefits is primarily based on whether the disability prevents the policyholder from performing their occupation for a specific period. The elimination period or waiting period is a key factor in LIDI policies and is the time that must pass after disability occurs before benefits are payable. This period typically ranges from 30 days to 180 days. During this time, the policyholder is expected to be unable to work in their occupation due to their disability. Option A is incorrect as LID eligibility does not rely on recent history of employment but on the nature and extent of the disability. Option C is not standard requirement for LID benefits. Payment of premiums is important, but eligibility is not tied to the length of premium payments. Option D is incorrect because the duration of the disability needed for eligibility is typically much longer than 30 days, and the definition of permanent disability is more complex and varies across policies. Question 3. Scenario-based question. Disability insurance claims process. Mr. Evans, a construction worker in South Carolina, has been unable to work due to an accident that left him with a fractured leg. He filed a claim for short-term disability insurance with his insurer. After submitting the initial claim form, the insurer requests additional medical documentation to confirm the severity of the injury. The insurer gives him a 30-day deadline to provide the required documents. After 30 days, Mr. Evans still hasn't submitted the documents and receives a letter from the insurer stating that his claim is being denied. What should Mr. Evans do to potentially resolve this issue? A. Mr. Evans should file a new claim for long-term disability as short-term benefits are not available after 30 days. B. Mr. Evans should contact the insurer immediately to request deadline extension and provide the necessary documentation. C. Mr. Evans should file a complaint with the South Carolina Department of Insurance as the insurer cannot deny the claim for missing documents. D. Mr. Evans should accept the claim denial as insurers do not accept any late documentation under South Carolina law. Answer. B. Mr. Evans should contact the insurer immediately to request a deadline extension and provide the necessary documentation. Explanation. In the claims process for disability insurance, it is crucial that policyholders adhere to the documentation submission deadlines. However, South Carolina regulations typically allow for communication and negotiation between the insured and the insurer. If Mr. Evans missed the deadline, he should contact the insurer immediately and request an extension or explain the situation. Insurers may grant an extension if there is a valid reason for the delay and the necessary documentation is subsequently submitted. Option A is incorrect because Mr. Evans is still eligible for short-term disability benefits as long as he can prove his disability. Filing a new claim for long-term disability would not resolve this issue. Option C is also incorrect because the Department of Insurance typically gets involved in cases of systemic non-compliance or unfair practices, not in individual claims of missed deadlines. Option D is incorrect because South Carolina law does not automatically deny claims for late documentation, as insurers may still grant extensions based on individual circumstances. Question 4. Claims process. What is the primary reason an insurer might deny a disability claim based on a pre-existing condition? A. The claimant failed to notify the insurer about the pre-existing condition at the time of applying for the policy. B. The claimant did not provide a complete medical history during the underwriting process. C. The insurer's policy specifically excludes coverage for conditions that existed within 12 months prior to the policy's effective date. D. The insurer discovered the claimant was not disabled due to the pre-existing condition, but rather due to another unrelated condition. Answer. C. The insurer's policy specifically excludes coverage for conditions that existed within 12 months prior to the policy's effective date. Explanation. Disability insurance policies often include pre-existing condition clause that excludes coverage for disabilities related to conditions the policyholder had prior to the start of the policy. This exclusion typically applies if the condition occurred within set period, often 12 months. This is common practice in South Carolina as well as in other states. The purpose is to prevent individuals from purchasing coverage after already knowing about disability or condition that might lead to claims. Option A is incorrect because pre-existing condition clauses are about when the condition occurred, not about failure to disclose it. Option B is incorrect as well because pre-existing conditions refer to medical issues existing before coverage starts, not necessarily to incomplete histories. Option D is unrelated as it focuses on the cause of disability rather than exclusions related to prior conditions. Question 5. Disability insurance regulations in South Carolina. Which of the following is true regarding the licensing requirements for disability insurance agents in South Carolina? A. Agents selling disability insurance must complete 40 hours of continuing education every 2 years to maintain their license. B. Agents must pass a state-specific examination in disability insurance to become licensed. C. A license is not required for agents selling disability insurance to employers offering group plans. D. Agents selling individual disability insurance policies must have a medical background to be licensed. Answer. B. Agents must pass a state-specific examination in disability insurance to become licensed. Explanation. In South Carolina insurance, agents must pass a state-specific licensing exam before they are authorized to sell disability insurance policies. This ensures they have the necessary knowledge of both state and federal regulations as well as industry standards. The requirement for passing an exam is standard in most states, including South Carolina. Option A is incorrect because while continuing education is necessary for maintaining a license, the number of required hours, typically 24 hours every 2 years, is not specific to disability insurance alone but covers all insurance-related areas. Option C is incorrect because even agents selling group disability insurance policies need a license to sell insurance. Option D is incorrect as well because agents do not need a medical background, but they must demonstrate proficiency in insurance laws, policy provisions, and claims processes. Question 6. Types of disability insurance products. Which of the following is a key difference between non-cancelable and guaranteed renewable disability insurance policies? A. Non-cancelable policies can be renewed at any time, while guaranteed renewable policies cannot be renewed. B. Non-cancelable policies provide coverage for a fixed period, while guaranteed renewable policies offer lifetime coverage. C. Non-cancelable policies guarantee that premiums cannot be increased, while guaranteed renewable policies may have premium adjustments. D. Non-cancelable policies do not require medical underwriting, while guaranteed renewable policies require it for renewal. Answer. C. Non-cancelable policies guarantee that premiums cannot be increased, while guaranteed renewable policies may have premium adjustments. Explanation. Non-cancelable disability insurance policies provide a guarantee that the insurer cannot increase premiums during the policy term, which is typically set for the life of the policyholder. On the other hand, guaranteed renewable policies ensure the policyholder can renew the policy, but the insurer may adjust premiums at each renewal. This means premiums for guaranteed renewable policies can increase based on factors such as inflation, changes in underwriting guidelines, or other considerations. Option A is incorrect because both types of policies are renewable. The difference lies in the premium structure. Option B is incorrect as neither type of policy has a fixed duration nor necessarily guarantees lifetime coverage that they can be renewed. Option D is also incorrect because both types of policies may require medical underwriting initially, but non-cancelable policies typically prevent adjustments based on medical conditions after issuance. Question 7. Eligibility requirements for disability insurance. Which of the following is not typically a requirement for an individual to qualify for Social Security Disability Insurance (SDI) benefits? A. The individual must have worked in jobs covered by Social Security for a sufficient amount of time. B. The disability must have occurred after a specific waiting period of 6 months. C. The individual must have a condition that is expected to last for at least 1 year or result in death. D. The individual must demonstrate that they are unable to perform any work due to their condition. Answer: B. The disability must have occurred after a specific waiting period of 6 months. Explanation: SSEI benefits require that the disability be long-term, meaning it is expected to last for at least 12 months or result in death. There is no requirement that the disability must have occurred after a specific waiting period of 6 months. The SSEI process does not involve a waiting period for the condition itself, but rather a waiting period for benefit payments, 5 months. Option A is true, as eligibility for SSDI requires sufficient work credits. Option C is correct, as SSDI is intended for disabilities that are long-term in nature. Option D is also correct, as the individual must show that they are unable to engage in any substantial gainful activity due to the disability, not just their previous job. Question 8. Disability insurance underwriting. How does an insurance company assess the disability risk of an applicant during the underwriting process? A. By using the applicant's credit score to determine the likelihood of the disability occurring. B. By evaluating the applicant's occupation, health history, and lifestyle choices to predict the likelihood of a claim. C. By relying exclusively on the applicant's medical history to assess potential risks. D. By determining if the applicant has previously filed any disability claims with other insurers. Answer: B. By evaluating the applicant's occupation, health history, and lifestyle choices to predict the likelihood of a claim. Explanation: during the underwriting process, disability insurers evaluate multiple factors to assess the risk associated with providing coverage. This includes the applicant's occupation, since some jobs are higher risk, their medical history, lifestyle choices such as smoking or alcohol consumption, and other factors that could impact the likelihood of becoming disabled. These evaluations help the insurer determine appropriate premiums and whether to offer coverage. Option A is incorrect because credit scores are not used in assessing disability risk. Option C is incomplete, as medical history is one of several factors considered. Option D is not typically a major factor in assessing risk, but may be considered for certain applicants with a history of frequent claims. Question 9. Claims adjustment and management. Which of the following actions is most likely to be taken by a claims adjuster when evaluating the severity of a disability claim? A. The adjuster will review the claimant's employment records and income level to determine eligibility. B. The adjuster will evaluate the functional limitations of the claimant and consider independent medical evaluations. C. The adjuster will focus solely on the claimant's diagnosis and the severity of their condition, disregarding their work history. D. The adjuster will automatically approve the claim if the claimant's condition is supported by physician's note. Answer: B. The adjuster will evaluate the functional limitations of the claimant and consider independent medical evaluations. Explanation: claims adjusters assess the severity of disability claims by evaluating the claimant's functional limitations and how the disability impacts their ability to perform daily activities and work. Independent medical evaluations are often used to gain an objective, third-party assessment of the claimant's condition. This is important to ensure that the claim is valid and that the claimant is truly unable to perform their occupation or daily activities. Option A is incorrect because while income may be considered for benefit calculations, the severity of the disability is evaluated through functional assessments, not just employment records. Option C is incorrect because both medical diagnosis and functional limitations are essential in evaluating the claim. Option D is incorrect, as physician's note alone is not sufficient to approve claim without full assessment of the claimant's condition. Question 10. Disability insurance benefits. Which of the following best describes the elimination period in a disability insurance policy. A. The time period after the policyholder becomes disabled but before they can apply for benefits. B. The period during which the insurer investigates the claim before benefits are paid. C. The waiting period that must pass before benefits begin after the disability occurs. D. The time period during which the policyholder is required to pay premiums even though they are unable to work. Answer: C. The waiting period that must pass before benefits begin after the disability occurs. Explanation: the elimination period in disability insurance is the waiting period that begins after the disability occurs and ends when the policyholder starts receiving benefits. This period can range from several weeks to several months. Option A is incorrect because the elimination period is not about applying for benefits but about the waiting period before the benefits are paid. Option B is also incorrect as it focuses on the investigation process, which is not the definition of the elimination period. Option D is incorrect as premiums may continue to be required, but the elimination period specifically refers to the waiting time before benefits are paid. Question 11. Occupational classifications. In disability insurance underwriting, how do insurers assess the risk of a policyholder's occupation? A. By determining if the occupation involves manual labor, which is considered higher risk for disability. B. By reviewing the applicant's education level and professional certifications. C. By evaluating whether the occupation offers paid sick leave benefits. D. By examining the length of time the applicant has been employed in their occupation. Answer A. By determining if the occupation involves manual labor, which is considered a higher risk for disability. Explanation: disability insurance policies assess the risk of a policyholder's occupation by evaluating whether it involves manual labor or other activities that increase the likelihood of injury or illness. Occupations with higher physical demands are considered riskier, which could lead to higher premiums for the policyholder. Option B is incorrect because education level and certifications do not directly correlate with the physical risks associated with disability. Option C is incorrect because paid sick leave is not the factor considered by insurers for disability risk. Option D is irrelevant to the underwriting process as employment length does not directly determine disability risk. Question 12. Long-term versus short-term disability. Which of the following is a key difference between short-term and long-term disability insurance? A. Short-term disability insurance typically pays benefits for a longer duration than long-term disability. B. Long-term disability insurance covers a wider range of illnesses and injuries than short-term disability. C. Short-term disability insurance provides immediate benefits while long-term disability requires a waiting period. D. Long-term disability insurance offers benefits for a longer duration than short-term disability insurance. Answer: D. Long-term disability insurance offers benefits for a longer duration than short-term disability insurance. Explanation: the key difference between short-term and long-term disability insurance is the duration of the benefits. Short-term disability typically covers a period of a few months, usually up to 6 months, while long-term disability can provide benefits for several years or until the policyholder reaches retirement age. Option A is incorrect because short-term disability typically covers shorter durations, not longer. Option B is incorrect as long-term disability may cover a broader range of conditions, but it is more about the duration of coverage rather than the scope of illnesses. Option C is incorrect because long-term disability usually requires a longer waiting period than short-term disability. Question 13. Premium calculation factors. Which of the following factors does not typically affect the premium rates for disability insurance? A. The policyholder's occupation and job duties. B. The policyholder's age and health status. C. The policyholder's income and benefits amount. D. The policyholder's credit score. Answer: D. The policyholder's credit score. Explanation: disability insurance premiums are based on factors like the policyholder's occupation, health status, age, and the amount of coverage they seek. However, the policyholder's credit score does not typically impact disability insurance premiums. Option A is incorrect because occupations with higher physical risks can lead to higher premiums. Option B is incorrect because older policyholders and those with pre-existing health conditions may face higher premiums. Option C is incorrect because the policyholder's income and the benefits they want will affect the premium calculations. Question 14. Social Security Disability Insurance (SSEI) modifications. Which of the following statements is true regarding Social Security disability insurance? SCI benefits are available to individuals regardless of their work history as long as they are disabled. B. SDI requires that the applicant has earned a certain number of work credits, typically through paying Social Security taxes. CSDI benefits are available only to individuals under the age of 40. DSSDI benefits are available only to individuals who have a disability caused by an accident. Answer: but SAI requires that the applicant has earned a certain number of work credits, typically through paying Social Security taxes. Explanation: to qualify for SSDI, an individual must have worked in jobs covered by Social Security and accumulated a certain number of work credits. These credits are earned through paying Social Security taxes on earnings. Option A is incorrect because work history is a requirement for SSDI eligibility. Option C is incorrect because SSDI benefits are not age-restricted to individuals under 40. Rather, they are available to anyone who has earned sufficient credits. Option D is incorrect, as SSDI benefits are available for any qualifying disability, not just those caused by accidents. Question 15. Disability income benefit limits. What is a typical limitation in disability income insurance policies regarding the amount of benefit paid to the insured? A. Benefits are usually paid at 100% of the insured's pre-disability income. B. The policyholder can choose the benefit amount up to their total income. C. Benefits are generally limited to percentage of the insured's pre-disability income, often between 50% to 70%. D. Benefits are capped at fixed amount regardless of the policyholder's income. Answer: C. Benefits are generally limited to a percentage of the insured's pre-disability income, often between 50% to 70%. Explanation: most disability income insurance policies pay a percentage of the policyholder's pre-disability income, typically between 50% and 70%. This limitation helps keep premiums affordable while still providing a significant portion of the policyholder's lost income. Option A is incorrect because paying 100% of the insured's pre-disability income is rare and would make premiums excessively expensive. Option B is incorrect because the benefit amount is often capped as percentage of income, rather than the policyholder choosing any amount. Option D is also incorrect because most policies cap benefits as percentage, not fixed dollar amount. Question 16. Taxation of disability benefits. How are benefits from a group disability insurance policy typically taxed? A. Group disability insurance benefits are always taxed as income to the recipient. B. If the employer pays the premiums, the benefits are typically tax-free to the employee. C. If the employee pays the premiums, the benefits are taxable as income. D. If the employer pays the premiums, the benefits are typically taxed as income to the employee. Answer: D. If the employer pays the premiums, the benefits are typically taxed as income to the employee. Explanation: if an employer pays the premiums for a group disability insurance policy, the benefits received by the employer typically subject to income tax. This is because the employee did not pay for the premiums with after-tax dollars. If the employee pays the premiums, the benefits are usually tax-free. Option A is incorrect because it depends on who pays the premiums. Option B is incorrect, as employer-paid premiums usually result in taxable benefits. Option C is incorrect, as employee-paid premiums usually result in tax-free benefits. Question 17. Short-term disability (STD) coverage. Which of the following is typically not covered by short-term disability insurance? A. Illnesses that prevent the insured from working for more than a month. B. Non-work-related injuries and illnesses that temporarily disable the insured. C. Disabilities that occur during the course of employment. D. Pregnancy-related disabilities subject to policy provisions. Answer: A. Illnesses that prevent the insured from working for more than a month. Explanation: short-term disability insurance typically provides coverage for illnesses or injuries that prevent a person from working for a relatively short period, usually up to 6 months. If the illness or injury is expected to last longer than this, the policyholder may need to transition to long-term disability coverage. Option B is incorrect because short-term disability covers non-work-related disabilities. Option C is incorrect as work-related injuries are typically covered by workers' compensation rather than short-term disability. Option D is incorrect as short-term disability may cover pregnancy-related disabilities depending on the specific policy. Question 18. Eligibility for disability benefits. Which of the following would most likely disqualify a claimant from receiving disability benefits under a group policy? A. The claimant is self-employed but has been paying into the policy for several years. B. The claimant refuses to undergo necessary medical treatment. C. The claimant has been diagnosed with a condition that is expected to improve in a short period. D. The claimant's disability is a result of an accident that occurred while driving a vehicle for personal use. Answer: B. The claimant refuses to undergo necessary medical treatment. Explanation: refusing to undergo necessary medical treatment could disqualify a claimant from receiving disability benefits, as most disability policies require claimants to take reasonable steps to improve their condition or comply with medical recommendations. Option A is incorrect, as self-employed individuals can also be eligible for benefits if they meet the policy's requirements. Option C is incorrect, because condition expected to improve quickly may still result in temporary disability benefits depending on the policy. Option D is incorrect, because accidents during personal use may still be covered unless explicitly excluded in the policy. Question 19. Underwriting for disability insurance. How do insurers assess an applicant's health history when underwriting disability insurance policy? A. Insurers use the applicant's medical history to predict the likelihood of disability occurring. B. The insurer may require the applicant to provide detailed work history. C. The insurer will offer coverage regardless of pre-existing health conditions. D. Insurers cannot consider health history when underwriting disability insurance policies. Answer A. Insurers use the applicant's medical history to predict the likelihood of a disability occurring. Explanation: insurers use an applicant's medical history to evaluate potential risks associated with offering coverage. A history of certain medical conditions may lead to higher premiums or exclusions from coverage. Option B is incorrect, because work history is not the primary focus in underwriting. A health history is more important. Option C is incorrect, because pre-existing conditions can affect eligibility or lead to higher premiums. Option D is incorrect, as health history is a critical factor in underwriting disability policies. Question 20. Renewability of disability insurance policies. Which of the following best describes the guaranteed renewable feature in a disability insurance policy? A. The policyholder can renew the policy regardless of health conditions, but premiums may increase based on the insurer's discretion. B. The policyholder can renew the policy, and the premiums will remain fixed for the life of the policy. C. The insurer guarantees that the policyholder will never be able to cancel the policy. D. The insurer has the right to terminate the policy after the initial term if the policyholder's health worsens. Answer A. The policyholder can renew the policy regardless of health conditions, but premiums may increase based on the insurer's discretion. Explanation: guaranteed renewable policy allows the policyholder to renew the policy even if their health condition changes. However, the insurer may adjust premiums based on factors such as age or claims experience. Option B is incorrect, because premiums typically increase over time. Option C is incorrect, as the insurer can still cancel the policy for non-payment or other reasons. Option D is incorrect, as the insurer cannot terminate guaranteed renewable policy based on the policyholder's health. Question 21. Definition of disability. Which of the following is typically used as the definition of total disability in a disability insurance policy? A. The inability to work in the specific occupation the policyholder held prior to becoming disabled. B. The inability to perform any work duties in any occupation. C. The inability to perform activities of daily living, such as eating or bathing. D. The inability to work in the same geographic location the policyholder previously worked. Answer A. The inability to work in the specific occupation the policyholder held prior to becoming disabled. Explanation: total disability often refers to the inability to work in the specific occupation the policyholder was engaged in before becoming disabled. This is known as the known occupation definition. Option B refers to any occupation policies which have a stricter definition. Option C is incorrect, because it refers more to long-term care insurance. Option D is incorrect, as geographic location is not typically part of the definition of total disability. Question 22. Residual disability benefits. What is the purpose of residual disability benefits in a disability insurance policy? A. To cover the entire loss of income when the policyholder is fully disabled. B. To provide partial income benefits if the policyholder can still work but at a reduced capacity. C. To provide benefits for policyholders who are only temporarily unable to work due to an illness. D. To provide benefits only if the disability is caused by a workplace accident. Answer: B. To provide partial income benefits if the policyholder can still work but at a reduced capacity. Explanation: residual disability benefits are designed to provide partial income replacement if the policyholder is able to work but suffers a loss of income due to the disability. This benefit helps bridge the gap if the policyholder is not fully disabled but still unable to work at full capacity. Option A is incorrect as it refers to total disability benefits. Option C is incorrect as residual benefits apply when the person can still work, just not to the same extent. Option D is incorrect because residual disability benefits are not limited to workplace accidents. Question 23. Pre-existing conditions. Which of the following statements is true about pre-existing conditions and disability insurance policies? A. Pre-existing conditions are always covered under disability insurance policies. B. Pre-existing conditions are usually excluded from coverage for a certain period, known as the waiting period. C. Pre-existing conditions are only covered if the policyholder is not receiving treatment for them. D. Pre-existing conditions are irrelevant to disability insurance underwriting. Answer: B. Pre-existing conditions are usually excluded from coverage for a certain period known as the waiting period. Explanation: many disability insurance policies include a waiting period during which pre-existing conditions are not covered. After this period, the condition may be covered if the policyholder meets the requirements. Option A is incorrect because pre-existing conditions are generally not covered immediately. Option C is incorrect because whether or not the policyholder is actively receiving treatment is not the main determining factor. Option D is incorrect as pre-existing conditions are a significant part of the underwriting process. Question 24. Disability insurance benefit period. Which of the following best describes the benefit period of a disability insurance policy? A. The waiting period before benefits are paid out to the insured. B. The period during which the policyholder is required to pay premiums. C. The duration of time that benefits are paid to the policyholder while they are disabled. D. The time it takes for the insurer to process the claim and start paying benefits. Answer: C. The duration of time that benefits are paid to the policyholder while they are disabled. Explanation: the benefit period refers to the length of time during which the policyholder will receive disability benefits if they remain disabled. It could range from a few months to several years, or in some cases until retirement age. Option A describes the elimination period, not the benefit period. Option B is incorrect as premiums are typically paid for the life of the policy, but this is not related to the benefit period. Option D refers to the claims process and is not directly related to the benefit period. Question 25. Waiver of premium rider. What is the purpose of a waiver of premium rider in a disability insurance policy? A. To reduce the monthly premiums if the policyholder becomes disabled. B. To cancel the policy if the policyholder is unable to work due to a disability. C. To waive the payment of premiums if the policyholder becomes disabled. D. To extend the benefit period for a disabled policyholder. Answer: C. To waive the payment of premiums if the policyholder becomes disabled. Explanation: a waiver of premium rider allows the policyholder to stop paying premiums if they become disabled. The rider ensures the policy remains in force even though the policyholder is not working and may not have the means to pay premiums. Option A is incorrect as it does not describe the function of the rider but instead suggests a reduction of premiums. Option B is incorrect as the waiver of premium does not cancel the policy. Option D is incorrect as the rider does not extend the benefit period, but rather it ensures coverage remains active. Question 26. Own occupation versus any occupation policies. Which of the following best describes the difference between a own occupation and any occupation disability insurance policies? A. Own occupation policies provide benefits if the policyholder cannot perform any job, while any occupation policies provide benefits only if the policyholder cannot perform their previous job. B. Own occupation policies are more restrictive and provide benefits only if the policyholder cannot perform their current job duties, while any occupation policies provide benefits for broader disabilities. C. Own occupation policies are generally more expensive than any occupation policies because they offer broader coverage. D. Any occupation policies cover any type of disability, while own occupation policies are specific to workplace accidents. Answer: C. Own occupation policies are generally more expensive than any occupation policies because they offer broader coverage. Explanation: Own occupation policies pay benefits if the policyholder cannot perform their specific job, even if they can perform other types of work. These policies are more expensive because they provide more extensive coverage. Option A is incorrect because it reverses the definitions of the policies. Option B is incorrect because own occupation policies are less restrictive than any occupation policies. Option D is incorrect because any occupation policies are not specific to workplace accidents but focus on the ability to perform any occupation. Question 27. Disability insurance exclusions. Which of the following would most likely be excluded from coverage under a disability insurance policy? A. A disability caused by a car accident. B. A disability resulting from a pre-existing condition that was disclosed at the time of application. C. A disability caused by alcohol or drug abuse depending on the policy. D. A disability caused by an illness unrelated to the policyholder's occupation. Answer C. A disability caused by alcohol or drug abuse depending on the policy. Explanation. Disability insurance policies may exclude disabilities caused by alcohol or drug abuse depending on the policy's terms. Many policies have exclusions for self-inflicted injuries or those resulting from substance abuse. Option A is incorrect because car accidents are usually covered unless explicitly excluded. Option B is incorrect because pre-existing conditions are generally covered after the waiting period in many policies. Option D is incorrect as most policies cover disabilities regardless of whether they are related to the policyholder's occupation. Question 28. Disability insurance for self-employed individuals. Which of the following is true about disability insurance for self-employed individuals? A. Self-employed individuals are automatically eligible for disability benefits through government programs. B. Self-employed individuals typically purchase individual disability insurance policies to cover their income. C. Self-employed individuals cannot purchase disability insurance unless they have an employer-sponsored plan. D. Disability insurance premiums for self-employed individuals are generally much lower than for employees. Answer B. Self-employed individuals typically purchase individual disability insurance policies to cover their income. Explanation. Self-employed individuals often purchase individual disability insurance policies to protect their income in the event of a disability. These policies are designed to replace lost income due to illness or injury. Option A is incorrect as self-employed individuals are not automatically eligible for disability benefits from government programs unless they meet specific criteria. Option C is incorrect because self-employed individuals can purchase their own disability insurance without an employer-sponsored plan. Option D is incorrect as disability insurance premiums for self-employed individuals are usually higher due to the lack of group discounts and other factors. Question 29. Disability insurance for high-risk occupations. Which of the following occupations would most likely result in a higher premium for disability insurance? A. A computer programmer who works in an office. B. A construction worker who operates heavy machinery. C. A teacher in a public school. D. A pharmacist working in a hospital. Answer B. A construction worker who operates heavy machinery. Explanation. High-risk occupations such as construction work or operating heavy machinery increase the likelihood of injury or disability, leading to higher premiums for disability insurance. Option A is incorrect as office-based jobs generally carry a lower risk of physical disability. Option C is incorrect because teaching, though demanding, is not considered a high-risk occupation for disability purposes. Option D is incorrect because pharmacy work does not typically involve high physical risks, thus lowering the risk profile. Question 30. Disability insurance benefit limitation. Which of the following is a common limitation of disability insurance policies regarding the benefit amount? A. Benefits are typically limited to a percentage of the policyholder's pre-disability income, often 6080%. B. Benefits are paid in a lump sum equal to the policyholder's full salary. C. Benefits are unlimited and paid for the policyholder's lifetime. D. Benefits are only paid for the first 6 months of disability. Answer A. Benefits are typically limited to a percentage of the policyholder's pre-disability income, often 6080%. Explanation. Most disability insurance policies pay a benefit amount that is a percentage of the policyholder's pre-disability income, typically ranging from 60% to 80%. This helps to replace the portion of the lost income while still encouraging the policyholder to return to work. Option B is incorrect because benefits are not typically paid in a lump sum. Option C is incorrect as disability insurance benefits are usually not paid indefinitely and the benefit period is often limited. Option D is incorrect because benefits can extend beyond 6 months depending on the policy terms.